How to make profit from the fact that 90% traders lose money in the market. In this video, we will discuss 3 major mistakes of 90% traders and how we can make profit in simple and logical way. Hi, my name is Sharath. Welcome to Market Action. The first and most important mistake most of the people do is trading opposite to the trend. First, we will understand this mistake and then I will directly show you in that chart. The most people, what they will do is when the price make a strong upward directional momentum, when price tries to make a downward directional momentum, or when price makes a bearish candle, they think that price already made a upward directional momentum. Now price will make a big fall. This is the major mistake with most of the people. By this mistake, most of the people miss the trend and they make losses in very good market. And in the same way, most of the people think that when price makes a sharp downfall momentum and when it tries to make an upward directional momentum, they think that it is a buying opportunity and they just press buy order in this situation. But what happens? Price try to make an upward directional momentum, consolidates here and make some fake breakouts or something like that, and after that it will reverse and make a huge fall. Here trader already lost his money and already missed this big momentum. So you should not do this mistake, and we will see how this happens in the chart directly. So traders, this is the example of Bank Nifty in 5 minutes time frame. I'm using TradingView replay button so that you can understand easily what happens in the live market. Here you can see price is trying to move in a downward direction. Overall trend of the price is in the downward direction. So this is the current day trend of the market. So let's play the TradingView replay button and let's see how the candle is forming. You can see here price made a downward directional momentum. So most of the traders, what they will do is they will think in the opposite. They think that price already made a downward directional momentum. Now price will make a sharp upward directional momentum. They think like that. They think that price already made a downfall directional momentum. Now from here price will not make any further momentum. So they trade opposite to the trend. This is the major mistake of most of the traders. Let's play the TradingView replay button. You can see here price is trying to hold here. After such a huge downfall momentum, price is trying to hold here, making some bullish candles. Price is trying to move in a upward direction. Here also you can see price made a bearish candle, but it is holding here. It is not breaking the lows, right? And now price is trying to make bullish candles. Here you can see price made a bullish candle, and if again price makes a strong bullish candle, most of the people take entry in the long side direction, thinking that price will make a upward directional momentum. Here you can see price made a strong bullish candle here. Now what happens? Most of the traders think that price made a downward directional momentum. Now price is holding here. Price will not make further downward directional momentum because already price made 500 to 600 points momentum, and now price will reverse from here. So they take position in the long side. They think that price will move in upward direction and they buy positions here, or they buy call options, or they might sell the put options or something like that, thinking that price will make a upward directional momentum. This is the one of the major mistake of 90% traders. We should avoid this mistake and we should not do this mistake rather than what we have to do. So let's play the candles and let's see how we can make profit from these simple mistake. Here you can see after that price is trying to move in a downward direction, or price will try to hold here. Price will not make a sharp upward directional momentum. Price will very rarely make these kind of reversals. Weak kind of reversals price will make very rarely. So we should avoid that momentum. So always remember, don't trade in the opposite direction. Wait for the price to break these lows. As a trader, we should do like that. We should not follow the 90% people. You should not enter here thinking that price will make a upward directional momentum. Rather than that, you should always wait for the price to break these lows, because most of the people entered here. Most of the people thought that price will make a upward directional momentum. There will be strong stop losses here. Most of the people will keep stop losses here. Once that low breaks, we can capture wonderful momentums. So this is the trap from big players. So we should not fall in this trap like 90% traders. So whenever there is a trend, whenever price is moving in one direction, don't try to catch the upward directional momentum. So just wait for the price to break the lows. Let me play the candles. You can see here price is again trying to hold here. You can clearly see that price made a doji sort of candle. Now the low has been broken. This is where you should enter. Why? Because the stop losses of retail players has been closed here. Most of the people exited their position and price will make a sharp downfall momentum here. So this is the mistake of 90% traders. We should not follow that method. We should always wait for the price to break the lows. This is where we should take entry as a 10% trader, as a successful trader. You can see here after that how price made a sharp downfall momentum, or how price is trying to move in a downward direction. Most of the 90% traders, what they will do, they already lost their money while price hits their stop loss, and they also miss the trend. They also miss this momentum also. So they lost the money and they miss the opportunity. So whenever market is in a good condition, never try to trade in the opposite direction. This is the first and most important mistake most of the people do. So we should avoid that mistake, and we should wait for the price to break the lows, and we can capture wonderful big momentums here, and we can make money from the mistakes of 90% traders. Let's see another example and let us see how it works. And if you wanted to know how to trade in trending momentum, then like this video and subscribe my channel and press that bell icon, so that I can understand you wanted to know how to trade in the trending momentums. So let's see another example. So this is the another example of Bank Nifty in 5 minutes time frame. Let me play the candles and let's see what happens. You can see here price made a sharp upward directional momentum. Price is trying to move in a strong upward directional momentum. So overall trend of the current day is in a upward direction. So price is trying to move in a upward direction. So now what happens? Most of the people think that price already made a upward directional momentum, and there are some swing resistances, or there are some resistances here, and price might reverse from here. But what happens? Price is trying to make bearish candles here, and most of the people think that if price makes another 2 or 3 bearish candles, I will take trade in the downward direction. So price will make some bearish candles to trap the 90% traders. You can see here price is trying to make the bearish candles here. Now what happens? Most of the people think that price already in a upward directional momentum, price already made some sort of huge momentum, and there are some small resistances. These all resistances are not important. These levels are not at all important. We will learn which levels are not important in the market in the future videos. For that reason, please make sure to subscribe this channel and press that bell icon, so that you won't miss the updates or you won't miss the future videos. So let's explain these concepts first. And you can see here price is trying to move in a downward direction. Most of the people, most of the 90% traders take positions thinking that price will make a downward directional momentum, or price will fall from here, because price already made a momentum in long direction. Price already moved 300 400 points. Price might not move from here. Price will not make further momentums, so they think price will fall in the downward direction. So they create positions here thinking that price will make a downward directional momentum. Let me play the candles. Let's see what happened next. You can see here price trying to make a downward directional momentum to trap the retail traders, or to trap the 90% people. After that, you can see here price is trying to hold here. Price is trying to hold itself, and it started to make some bullish candles here. So if you wanted to be in the list of 10% successful people, you should avoid this entry. You should wait patiently for the price to break this level, so that you can capture wonderful big momentums. Why? Because there are stop losses of so many people. They all entered here thinking that price will make a downside momentum. You can clearly see this in the chart. Let me play the candles here. You can clearly see that once the high of this candle breaks, price will try to make an upward directional momentum. You might seen this in many trending momentums also. You might face these problems also, right? So you can see here price is trying to break the high of this level where most of the people entered. Once price broke that level, you can see here how sharply price made a upward directional momentum. So this is the mistake of 90% traders. We should not do that mistake. We should just to wait for the price to break this high, and we are making money from the mistake of 90% traders. You can see here how price made a wonderful sharp upward directional momentum. So this is the one major mistake. You might have did this mistake, you might have faced this problem, or you might have heard from your many trading friends and all, right? So this is the mistake of 90% people, and we should avoid that mistake. Why we should avoid the 90% people's mistake? Because only 10% people make money in the market, and 90% traders lose money in the market. So we should not follow 90% traders. We should just follow 10% thing what works in the market, right? Now let us understand the second mistake, and let us see how we can make money from that mistake. The second most important mistake most of the people do is buying directly when price makes a gap up open. Whenever price makes a gap up open, people directly buy when price makes a gap up open, thinking that price is positive now, price will make a upward directional momentum. And same way, selling when price makes a gap down open. And whenever price makes a huge gap down, they will think that price will make a sharp downfall momentum from here, because price is already bearish. Now I can sell from this this level. So this is the one of the major mistake most of the people do, and we should avoid that mistake, and we can make money from that mistake also. Let me show that in the chart directly. Traders, here you can see this is the example of Bank Nifty in 15 minutes time frame. Just understand the concept here. Price is in a downward direction and price made a gap down open on 8th. On 6th, what happened? Price was in a downward direction. So price is moving in a downward direction. On 8th, price made a gap down open and first candle was bearish. So most of the people think that price was already in a downward direction and first candle is also bearish. Now price will make a sharp downfall momentum. Let us play the candles and let us see what happened and how we can make money from these mistake. Here you can see next candle made a sharp upward directional momentum by breaking the high of the bearish candle, and you can see how big was the momentum. So this is very important. Whenever price makes a gap down open, you should not enter directly thinking that price will make a downward directional momentum. There should be price action. There should be some reason for the price to move in a downward direction. Why price reverses in the opposite direction? Most of the time what happens, many people will take positions in the previous day and they will carry forward the position, and when market opens they will book their profit. So we will discuss this concept very deeply in the next videos, but for this video that is the major concept, or that is the major reason why price will make a upward directional momentum. So in this condition, if the price makes a bearish candle, if the high of that first candle breaks, we can capture wonderful big momentums if there are no resistances, right? So in this condition what we can do, we should not take trades in the downward direction. We should wait for the price to make a upward directional momentum, or we should try to observe some price action in the upward directional momentum so that we can make money, because most of the people keep their stop loss. Sometimes what happens, first candle will be bearish, if the high breaks we can take the entry. Otherwise sometimes what happens, we have to wait for some price action. Sometimes there will be some consolidations here, then the price will make a momentum. So we have to wait for the price action. We have to see how the price breaks this high or how the price will make a upward directional momentum. This is the one factor you should remember in trading. Never take selling trades directly when price makes a gap down open. Wait for some price action. Price will make some price action, then price will move in a downward direction. Unless and until there is a proper reason, or there is a news, or there are some price action breakouts, we can't take direct to short entries, or we can't buy directly when the price makes a gap up open. I will show the example for that also. But now just understand, we should not take directly selling entries when price makes a gap down open. We should wait for some price action to move in a upward direction. So this is the one important factor you should remember. Let us see another example. In this example also you can clearly see that on 3rd price made a gap open and first candle was a bullish candle. On 2nd price made a consolidation and then the breakout has been happened here and price directly opened a gap up open. So most of the people what they do is, when price makes a gap up open, they think that from here price will make a upward directional momentum. So that is the wrong assumption. That is the 90% trader thing. So we should avoid that mistake and we should wait for some price action whenever price makes a gap up open. We should see whether the high is breaking, whether price is respecting the highs and making candles above this level. We should think like that and we should wait for some price action whenever price makes a gap up open. So let's play the candles and let's see what happened next. Now we clearly understood that 90% people will take trades in the upward direction and they will wait for the price to move in a upward direction. So now we know the mistake of 90% traders. Now we can take short entry here, or we have to wait for short entry based on some price action. Here what might be the price action? If the low breaks, we can expect some sort of good momentum in this price. Why? Because most of the people entered long here, and if the stop losses of those people hits, and price will make a downward directional momentum. So here this is the price action. So always remember, when price makes a gap up or when price makes a gap down open, don't enter directly thinking that price will make a upward directional momentum or price will make a downward directional momentum. Always wait for some price action and wait for the price to move in opposite direction of 90% traders. Here you can see price broke the level and price is now moving in a downward direction. So this is the price action. This is the price action you should focus on, and you should avoid the mistake of 90% traders. And most of the people might have faced this problem, or most of the people might did the same thing. Whenever price makes a gap up open, they might have took the entry in the long side and price might have reversed in their opposite direction. You might relate to this problem. Now you can turn this problem into a profitable trading, right? So this is the thing. Always wait for proper entry, always wait for price action, and think how 90% traders has been trapped and use that opportunity. And you can clearly see that how wonderfully price made a momentum momentum, you can clearly make 50 to 80 points premium profit in this momentum, right? I hope this concept is clear for you. Let us see the third problem or third mistake of 90% traders. The third mistake 90% traders do is following the crowd. What it means? Most of the people follow the crowd. If anyone is saying this stock will move in an upward direction, they will buy that stock. For example, when Paytm IPO happened, many people were positive about the Paytm. Many people were saying, I will buy the Paytm, I will enter Paytm, I will invest in Paytm IPO, I should not miss the Paytm IPO, something like that. And at that time, what happened? Many retail traders bought the Paytm IPO just because most of the people were positive about Paytm. So whenever the crowd is positive, whenever most of the people are positive about something, don't enter that trade. Don't buy that trade or don't buy that stock. You should remember that always. Whenever whole public, whole crowd is positive, you should never enter that stock. For example, Adani also, when Adani was making good upward directional momentum, everybody was bullish on Adani. Everybody was buying Adani. Most of the retail traders had Adani in their portfolio. So this is the major mistake. When Adani made a downfall moment, most of the people were in loss. And in Zomato case also, most of the people were positive when Zomato IPO happened, right? So in that time also, you should avoid taking entry. When whole crowd is positive, you should think in the opposite, because 90% of the traders lose money in the market. So you should not listen to the 90% traders or 90% people. Whenever whole crowd is negative, you should think opposite. Whenever somebody is saying this will fall from here, this will not make a good upward directional momentum, just wait for upward directional price action. Just wait for some price action in upward direction so that you can make money. And same thing, whenever there is a news in the TV or in some article in some YouTube channels also. So whenever there is a positive thing about something, whenever everybody is saying positive about something, just stay away from that and just wait for some opposite opportunities. Let's see that in the chart itself. Here you can see this is the chart of Paytm. Paytm made a wonderful fall from the top. Everybody was positive when Paytm IPO happened. But in that time, if you thought in the opposite way of 90% people, you would have made wonderful money in Paytm, right? So this is the factor. And now Paytm is trying to hold here. Let us wait for some price action and let us see what will happen. Let us move to the Adani stock. Let us move to the Adani chart also. Here you can see this is the chart of Adani in monthly time frame. Most of the people were bullish about Adani when price was moving like this. This is the trap the big players do for retail traders. When price makes such wonderful momentum, most of the retail traders enter in the market thinking that price will make another further upward directional momentums. So this is the reason why you should avoid these kind of stocks. Whenever price made a downward directional momentum, you can clearly see that how sharp was the move. In that time, you can't able to exit also. So always remember, just wait for some price action in the opposite direction so that you can trade that stock in the opposite direction. This should be done when there is lots of noise in the public. When public is saying some positive news about something, then only you should do that. Otherwise, you should not trade in the opposite direction. Whenever there is some noise in the public, people are saying positive about something, people are saying negative about something, just think in the opposite, just wait for some price action in that stock or in that bank nifty or nifty or something like that, right? So here also we can see in Adani, there was an opportunity here. There was a price action here. Price made upward directional momentum and price consolidated here. Once the low broken, once the consolidation broken, once the support broken, you can see here how big was the fall. Always wait for the opportunity in the opposite direction when the whole crowd is positive or when the whole crowd is negative. This is the third problem. This is the third major mistake most of the retail traders or 90% people are doing, and we should avoid that mistake and we should use that mistake as an opportunity to make money. I hope this video was helpful for you. If this video was helpful, please make sure to like this video and subscribe my channel and press that bell icon so that you will get notification whenever I upload new videos in the channel. Thank you traders. Have a good day. Have a profitable week ahead.